Welcome everyone, and thank you for making the time to join our webinar around digitization of trade. In collaboration with the Singapore Chamber and TradeFlow Capital, we welcome you to our South African audience. Good morning, and to our Singapore audience, good afternoon, and thanks for joining. So today we're going to dive into some digitization of trade, which has become really popular in the segment of trade finance as well as just the management of trade. So by diving a bit further in today, I got our esteemed guest, the co-founder and CEO of TradeFlow Capital, who's joining us from Singapore today. Tom James, welcome, and thank you for joining.
Hello, thank you very much. It's great to be here today.
Amazing. And so this conversation will dive into some deep insights of trade flow management by Tom. And hopefully you can pose, and I should say not hopefully, but you can pose your questions in the chat section in the webinar section below, and we'll answer those questions at the end as we dive in. So Tom, welcome again. And I just want to dive into, some of your background, and for our audience, maybe just tell us a bit about yourself and what TradeFlow Capital Management does in the trade finance aspect of business.
Oh, thank you, Shiven. Yes. Well, me and the team, I mean, we come from very different backgrounds in the supply chain. I come from the commodity trading and investment arena. My co-founder comes from the commercial side and legal. We have shipping people, we have technologists, we have administration, accounting, all from various areas of the commodity industry. Everybody, in fact, you'd expect in a trading company, although we don't trade. What TradeFlow Capital does is we actually support other people's trade. So we actually help small, medium-sized firms all over the world, many in Africa, who are importing and exporting with Asia and around the world, to fund and get enough money to finance their import and exports of core commodities, agricultural products, energy products, and metals. We take a lot of recycled metals for recycling, which Africa exports quite a lot of, and Asia processes a lot of. So we kicked off in 2016, looking at what is now termed, and perhaps many people watching this are already aware of, what's called the trade finance gap, which is where small, medium-sized firms in particular have been hard hit, certainly post-2008 global financial crisis, where the cost of lending for banks has gone up, the actual internal costs of compliance has gone up. And so, unless you are digitizing, to go on to the topic for today, unless you digitize your processes and operating a very sort of lean and mean kind of administration, it's often very difficult to help finance or even onboard small, medium-sized firms. So in 2016, we looked at why banks couldn't lend, why small firms couldn't borrow money to do their trades, international trade. And it seemed that a lot of that came down to a lack of data. So, the trades were good trades, but, lack of data meant it was very costly or impossible for people to actually evaluate whether they could lend money or not. So the simple answer was digitize, get the data, get rid of the bits of paper, and make it more cost effective to review and process, and in most of the country, accept the SME for some form of funding. And so that's what we did. But back then in 2016, even, which is only 8 years ago, there was not much digitization of supply chain. It took us a couple of years before we could even actually really start in 2018 to review people's import-export trades. To get enough digital technology together to be able to do that.
No, I mean that's amazing, and the limitations that come from trade have sort of plagued the African continent as well as just international trade on a global level, and that supply chains continuously seeing geopolitical tensions, the Baltimore Bridge sort of collapsing, sort of impacting that trade, and obviously there's blame on technology there. But I just want to dive in more. You spoke about digitization and that identity of digitization in your breakdown. How is digital identity a challenge in asset tracking, particularly in the segments, what initiatives exist? I know trade trust is something we spoke about earlier, but also it'll be interesting for you to elaborate further on how that trade trust actually works and what is being implemented in the space currently by TradeFlow Capital, as well as in the industry players that are addressing these challenges.
Well, that's right. So Trade Trust, which has been launched in Singapore by the IMDA, which is part of the Singapore government, I think is a very good application of the status that a government has, the neutrality, the pendency, and the guarantee of data. So there's two things there. I mean, on the Trade Trust, we're able to process and upload all the documentation related to a transaction. The government then authenticates and hashes that information. It actually digitizes that information and allows then third parties to confirm directly with the IMDA Trade Trust Singapore government system the authenticity of the documents that they're looking at. So they'll know, yes, this has not been modified, it has not been doctored or changed at all. You're looking at the real data. And so that really helps a sort of a confirmation of the truth of data, which really, again, brings trust in the digital network. So this is a very important mechanism and service that the government is offering there. And anyone all over the world can use it. You don't have to be a Singaporean company to use Trade Trust. You can integrate that into your systems from anywhere in the world. On the digital identity side of things, what is interesting is that it is already much easier post-COVID. There has been a lot of work done by shipping companies, logistic providers, and operators of ports to digitize their processes. So it's now actually much easier to identify your cargo, your container, where it is, what state it is in, etc., and where it's going next. So, we've been able to integrate to over 60 shipping firms already, and many more in the future to get that real-time data so we can track where things are going. So as an investor in those commodity import-exports, we know exactly where things are and also often what condition they're in. The interesting, so the digital identity of a cargo, no problem, but where we're still having a slowdown is the digital identity of people. So there's of course, governments protecting their citizens, have laws around data privacy. And so one of the barriers there is we're not quite there yet to be able to easily exchange information between countries. So in Singapore, we have what's called SingPass, where individual citizens can control and actually share data with their permission to authorized parties. That enables due diligence, know your counterparty, know your client, kind of almost immediate approvals there. So it's really great also for companies in Singapore. But we haven't seen that at a global level yet. Now we're seeing the European Union negotiating with Singapore digital trade agreements. And so there's all these bilateral digital trade agreements coming up, which either directly or alongside them, they have also discussions over digital identity and being able to allow people to share their data. So allow individuals and companies to control their data, but also share that to people they want to speed up that. Because at the moment, we're still getting faster on the trades themselves but then we're still waiting several weeks or months for bits of paper to come through by courier with somebody's passport copy.
Yeah. No, I mean that it. I've seen exporters and importers on the South African side sort of struggle with that the paper aspect of business as a whole. Meaning, they're struggling with sort of getting through the red tape, either with exchange control and documentation, as well as just sort of just carrying on with business. I think with South Africa being on the grey list, we have been impacted on an import export level, particularly with, as you said, document amendments in sort of their personal capacity to try and get away forgery. That kind of level has become sort of prevalent in the export business, import and export business in South Africa. So massive clamping down. A lot of the people that are currently on the call that I can see are in the import and export business. So I think they're also sort of nodding their head right now, saying the troubles that they've been going through and how exchange control looks at them. But you did mention the EU Singapore Digital Trade Agreement. It's something that has been in the works for a while, and amendments have come up as and when over the last few years. So, I mean, can you elaborate further on that EU Singapore Digital Trade Agreement? In that facilitating of trade, how are you looking at that digitalization transition as a business, and how does it contribute to overcoming these barriers that currently exist in the digitization space, particularly on ethics as well as cross-border transactions?
Yeah, I mean, I think there's a lot of interesting thing around digitization. First, was being able to get the data, and so then with the data on all of the situation, the real world information around the transactions, governments, customs, shippers, funders, everybody involved in the supply chain can be more efficient. And I choose my words carefully because there's been a lot of financial technology players out there who've come in, even with initially on electronic bills of lading, the bills of lading, which are the controlled documents for shipping. So if you control that document, you can control the right to discharge the cargo, deliver the cargo. So it's a form of ownership title document. But other people initially, because it was perhaps easier, was that were selling the technology of, oh, this will be cheaper, better, faster. And I think actually we're more interested in focusing on better, faster, even if it's the same cost as the bits of paper. Because a lot of people talk about why isn't digitization being adopted more? Well, if you're taking food off people's table and their revenue is going down, you know, why are they going to sell that technology? Why are they going to sell that solution? So, I think we need to focus more on better, faster, and there will be a lot of savings and cost efficiencies. I think, Shiven, you and I were exchanging a few bits of data before this webinar, and the ICC had come out a few years ago that there could be both $6.5 billion of estimated savings from adopting just electronic bills of lading versus bits of paper. Also, $9 trillion potential increase in trade across just the G7. So goodness knows how much across the G20 and the globe. So I think digitization we've seen enables our business. We could not do it without digitalization. We would not be able to throw enough people at the problem to be able to do it effectively and efficiently, I should say, because maybe the longest journey times for cargoes we experience is 60 days, and then some storage after that at ports. The shortest, just within intra-Asia could be 7 to 11 days, for Indonesia to India, perhaps, or something like that. So, if you throw lots of people at that, if you've still got bits of paper flying around, you actually would not be able to make a financing decision and also get the documents at the right place at the right time in 7 to 11 days. So digitization definitely speeds things up. It also makes things more transparent. So the last thing I'd mention is that already we're still early days in digitization, but we're already starting to see new investors, new sources of liquidity for financing trade coming into this space. So this is non-bank lending and non-bank investment, such as ourselves.
No, amazing. And what's really key for our audience that may have missed, and I mean, look at TradeFlow Capital Management. Tom has over 3 decades worth of energy experience in working in that supply chain. With his co-founder on a legal background, they're actually bridging that gap in servicing both the purchaser as well as the seller in this trade flow agreement. So making sure that both parties are secure and safe in this trade flow management process. So adding on to that as well, that almost $9 trillion dollars in that G7 trade aspect that Tom mentioned is crucial in terms of how we're looking at trade, but also how trade flow capital management is improving efficiency on a day-to-day basis for their client bases. So, adding on to that, Tom, we spoke about the cost benefits in this level, meaning almost $9 trillion coming into the market in terms of saving from digitization of trade. So what are the cost benefits in trade, in digitization of trade, and how do these trades become more insurable on a transaction by transaction basis? Because transparency, visibility, and I would say just ease and the cost benefit is far greater in using digitization. What are these benefits moving forward in the insurable space?
No, that's a very good question, and I'm glad you raised the insurance aspect because it's often missed that there was a trade finance gap. There has been, I think, an insurable gap as well, because definitely for like onshore warehousing and also cargo exports, not being able to have visibility or ease of visibility and transparency of where things are and what state they're in has definitely meant that a lot of things were not insurable just because of a lack of data, a lack of trackability or traceability, I should say. So we've already experienced this ourselves, and I'm sure others are or will be experiencing it, where by putting in place what are called IoT devices, be it cameras or sensors. And I think this is what will support the exponential growth of digitization in trade, is the fact that the cost of technology is coming down every year a lot. We're seeing we can put a small tag, an RFID tag onto a bag of rice for a couple of cents, or you can put in a camera in a warehouse, which with AI also for still thousands of dollars, which tracks your goods. Even if it's stacked up on a big pile of other people's goods, it still knows which bag is yours and which bill of lading it's attached to or warehouse certificate. So the fact that the cost of technology is coming down is really enabling this move now. I think it would have been very hard to do this 10 years ago. We found it difficult even 8 years ago in 2016. It still took a couple of years before we could be confident to set up our funds and start investing other people's money into trade with enough digital technology and being prepared to have to deploy all of that ourselves. But thankfully, post-COVID, we've seen a lot of, as I said, logistics firms, shipping firms already putting these technologies in place. So we just have to make that connection, the data connection with their systems to be able to trace cargoes and keep tabs on it. And all of that helps. And I think, I don't know if we have any empirical evidence yet of reductions in insurance costs, but certainly making it easier to disclose and show what is being insured, and no doubt, maybe we'll see a positive step from insurers where they say, well, if we've got all that information, we can at least give you a better pricing, more realistic pricing. Sometimes it might be more expensive, sometimes it will be less cheaper, but at least it won't be, won't be paying when the risk actually is much lower.
Yeah, no, I mean, agreed 100%. I had an interesting conversation with a Web3 company that's playing in the insurance space currently. And what's really interesting, and while they sort of pioneering this new insurance type, they're actually insuring the supply chain rather than the goods, which actually falls really well within that ecosystem of you're talking about how insurers are actually looking at insurance, but also how that efficiency will sort of become I would say the inefficiency would become a lot more smaller over a given period of time with that amount of information. And we touched on the base of that efficiency sort of growing on a day-to-day basis, but on a year-on-year basis since you started in sort of digitization, making trade a lot more easier. So, and I know you mentioned earlier that better and faster in a case where automation is starting to get more cheaper, and the business and SME access is sort of growing with companies like OpenAI as well as Microsoft and RPA sort of opportunities in the market. So while cheaper transactions are desirable in the trade finance flow, should we and should trade finance operations focus on transactions that are better and faster, or an alternative? And how does this approach impact the overall trade efficiency? If you can elaborate further on that, I think that's where everyone's looking at. Generative AI has become more popular. It has become an application and a way of how we sort of do our daily tasks. How are those efficiencies improving?
Yeah, I mean, AI is touching the industry in many different ways. I think we've seen it first in systems now which are using a type of fuzzy logic to at least compare transactions. And banks ourselves also signed up to many of these where we contribute bills of lading and invoice data. The system then looks for any other trades within the financial ecosystem that look similar or too similar, in order to also help counteract what some firms experienced during COVID and over the last decade or so, with sort of double financing or triple financing, just some of the fraud risk which we've seen in the industry. So that's certainly helping bring further confidence to avoiding that sort of double financing of things. AI also, we employ a lot of AI around actually analyzing the data, because the first step of digitization that we've experienced is that instead of issuing bits of paper, companies are issuing PDFs. So PDF documents. So that's still a step in the right direction. It's not pure data, but it is at least digitized. And so we have AI systems, and I'm sure other people have as well, with reading and finding information from the documents. When you have a couple of hundred, several hundred documents for each cargo, whether it's a container or a bulk vessel, that's a lot of pages to go through just to find the bits of information that you need to verify. So AI has already certainly revolutionized that acquisition of data and the checking of that information. I think it's also now, on the other end, enabling the investigation into that data, so the interrogation of that information. Whether it's generating a report on the fly, just talking to your AI system saying, hey, give me a report that shows me this against this other commodity and blah, blah, blah. So management information, I think that's already starting to see that in the commodity trade industry. but certainly for commodity financing, that's a big help as well in order to really help you evaluate your portfolio, your risk, be able to access this huge amount of data now. So we've got this wealth of data, and we obviously AI is really helping us be able to analyze that as well, and also sort of pick up on things which, small nuances which a human being might sort of not notice. So sometimes you see some interesting relationships between data which normally have picked up perhaps. So that also helps with planning and development, I think, of future business.
I see a question just came through now, and we mentioned the trade trust earlier, but this is also a really interesting question, and they're talking about what ways are public and private partnerships that you know of fostering collaboration in this digital infrastructure and technology within the supporting the growth in these businesses in Singapore, and as well as the commodity trade in Singapore as well. How are those public-private partnerships sort of growing the industry?
Sure. Yeah. I mean, I think obviously IMDA, the trade trust, is perhaps the most visible one initially, which is open to everyone in the world to integrate to, and allow for that sort of independent, neutral verification of the data around your transaction. That avoids anybody along the supply chain either adding errors by accident or deliberately. Those will get picked up. And I think also then we've seen some banking industry groups and the regulators creating these repositories of data around transactions, so that and you need that neutral trust. It's very difficult for private organizations to take on the types of potential financial liabilities if you're checking people's trade data and get it wrong. The governments, that's a good role for them to be able to play there, but whether it's regulators or ministries of trade, to be able to give that trust framework where people can contribute data and either confirm that information is good, or check whether someone is trying to do the same trade twice in the financial ecosystem, all these types of things for fraud prevention. It gives trust. And that the more trust you have, the more transparency you have, it's easier to people to price risk effectively. And that should enable, so far we're seeing it is enabling more liquidity and new types of investors to come into this industry. It also reduces the cost also for banks as well. And they play a very, very important role to be able to lend and to continue to lend and hopefully increase their lending into this space as well.
No, amazing. I think, and I hopefully that answers the question in the chat that, these partnerships do exist, and there's a growing need, but also the space for partnerships between public and private is growing steadily over time. And just to touch back on, we're talking about generative AI and the application. What are some of the near-term solutions that you see in the documentation, but also the process, the trade supply, the supply chain process? What are those near-term solutions do you see AI as sort as robotic process automation for those repetitive tasks being implemented in?
Yeah, so I mean, at the moment, I think a lot of people are still in the data gathering phase. So that's where the robot process automation comes in. So there's a lot of copying of data around still. So that helps. We certainly started off with that, and then we found RPA helped internally with our processes once we sort of mapped what the manual processes were. And I think the important thing there is that if you are automating anything, is map what you're doing now, but then also take a step back and check that you're not just going to automate a bad process. So also take a look. So we discovered that we could actually cut out a few steps in our processes when we automate. It's like there's no point in having those, because now we can have the system checking all that data. Also, a key thing is, the four eyes principle in terms of operational risk management is, you automate stuff, but that doesn't put people out of jobs. Those people now, instead of being, copy paste special data managers, they then become, quality assurance managers. They are then in the view of checking that the systems are working properly and that the data is correct. So hopefully, the nice thing about it is that you're able to also enhance the role of your staff in your business as well, from just punching data in to actually quality assurance and managing a process type role as well, which can be far more interesting and helps staff retention as well. So that's another little angle there which we've found. But I think AI as well, and the data acquisition, and going back to the earlier question about public-private partnerships, the nice thing is that regulation. So we've got the digital trade agreements coming in, but we've also got financial regulation coming in as well around digital transactions, digital assets as well. I think it's worth mentioning, very early days, but we're starting to see an exciting trend, which is called RWA, or real world asset tokenization. And for the uninitiated, tokenization is literally just taking all information about an asset, whether it's a building, a piece of art, or a cargo of rice, or a cargo of beans, and digitizing that, putting inside that legal contract, but which is becoming a digital contract, certain rights, whether it's getting a profit share or a dividend from that cargo, or certain rights of ownership over that asset. That is, we're starting to see that evolve. Regulation is there, and in many countries, and that brings down further the cost of being able to, the key thing, fractionalize. So before, if you had a $1 million deal, you could do it with bits of paper and get 1 million people to invest $1 in that transaction, but it costs so much money to do the administration and post those bits of paper everywhere. But digitally, it becomes a very, very low cost. So you start to, again, open up and allow more freedom of movement, of investment, and more liquidity. So, we're starting that, all of this from first capturing the data. Now that then allows, very new revolutionary ways to open up liquidity for the commodity industry, and import-export industry, just trade generally. Yeah.
No, amazing, amazing. And I've seen real world assets become so popular, particularly with new blockchain companies coming into the market to satisfy sort of the demand for real world assets, particularly in layer two applications on popular networks such as Solana, which is a lot more cheaper, a lot more effective, but also private chains being developed and then sort of plugging in. But just to add on to that, to our audience that may not know, the blockchain technology space has become very ripe for real world assets, particularly tokenization, as well as decentralized applications that are coming into the space for trade finance and other trade supply chain processes and flows. The demand is there, and particularly institutions such as Citibank, Standard Chartered, JP Morgan have all stepped into this real world asset flow. And as Tom mentioned, the sort of dividend or reward system via the blockchain system has become more accepting across the institutional investors, just because of the transparency and efficiency that these chains offer. So an example would be the ESG token, as well as just the general cross-border functionality JP Morgan currently offers. While that's sort of in testing phases, that system exists and sort of is ongoing. And, diving into the aspect of the blockchain technology, smart contracts are being used by I know it was tested as a letter of credit with a international bank in India. But expanding further onto that, the regulatory framework has become very accommodating, particularly in the UK and the Eurozone, to this aspect of blockchain technology, governance, tokens, and sort of that distribution and that distributed ledger technology has become sort of more adopted on an institutional level. So, I mean, adding on to that, how do you see regulatory frameworks developing to support trade finance and the importance of that regulation in utilizing this technology? Is will it do you see it improving the efficiency on a technology level and that digitization of trade? And what are the forthcoming limitations that you may see that the supply chain process may incur?
Yeah, it's the good thing is that certainly regulation has caught up with the technology, I think, now. In December 2023, TradeFlow Capital, we were able to do our first what's called e-note issuance. So this was based on the portfolio of transactions we were supporting for SMEs. We issued that initially in Switzerland, and then it was dual listed on our digital asset market in Singapore as well. So that's all thanks to the fact that regulation for digital assets, and as you mentioned, there's a lot of institutional players in digital assets. And I think it's very important for people watching this that there's a distinction between your cryptocurrencies, kind of Bitcoin and stuff like that, and the digital assets or real world assets. It's using the blockchain technology, but this is not cryptocurrencies. These are, as you termed, smart contracts. So this is leveraging all the benefits of blockchain, the encryption, the security, and the actual transparency of blockchain, which the regulators have understood now. Blockchain is not about hiding stuff. In fact, it's a perfect technology for keeping actually real-time connectivity and understanding of who owns what, where. And also the nice thing about it is that with digital assets law and regulations, these digital asset exchanges, which are coming up around the world, they are also doing the KYC, the anti-money laundering checks. And so we're able to, for the first time as a regulated group, enter those markets knowing that our fund administrator, that MES, everyone is happy with the regulation around the money flows on those exchanges. So that's now just starting to happen. I think that's a precursor, we hope, to more real world assets around trade finance being able to open up to a much broader range of investors and liquidity. So hopefully that will really start to tighten up and close that trade finance gap up.
Amazing. And I see there's another question as we touched on blockchain. How is TradeFlow Capital using or adopting blockchain, and how do they look forward to adopting this technology in the process?
Yeah, I mean, it's I think it's fair to say that over the last 8 years, we saw a lot of blockchain buzz. So everything suddenly became blockchain, and we didn't use any blockchain until now, until very recently, with looking at the whole digital asset space and opening up new sources of liquidity for trade finance. Block, Blockchain, we can see is very good at securing data. We've seen a lot of banks in Singapore around the world, international banks, looking at blockchain for these smart contracts. So this is like being able to program an individual contract and telling it what it should do. So on the 1st of March, that's the date that you must distribute dividends, or you must settle and close out and see who owns you and they need to get a certain return on that contract. So a lot of the banks are already employing and developing this for back office processing, as we say, so post-trade settlement processing. Most people don't realize, but a lot of the stock markets around the world already employ blockchain smart contract technology to be able to keep track. So they're already tokenizing in behind the scenes in the back office processing side of things. So where we could expect, I guess, we haven't seen it yet, where blockchain could help is obviously enabling people to actually trade physical commodities and with each other, knowing that the data in that block has been verified by various governments and other institutions, so you can independently verify that yes, the certificate of origin is good. Certificate of origins are now being digitized by the ICC in all over the world, starting that process. The bill of lading, electronic bill of lading is good. So I think the blockchain technology will enable us to really build that, I think, Web3 kind of trust factor, as they call it, where we can look at the data, and rather than relying on whether that data is correct just because one person put that data there, but it independently verify with the people that generated that information, whether it's the shipping operator, the port operator, the inspector, or customs, or whoever. So that being able to create that, I think, is only possible through blockchain, and we're just starting to see that develop. But it's very exciting. Over the next 5 to 10 years, I think we'll see some big changes going on in the market.
No, I totally agree. And for the audience, myself, at the 88 group, we've been piloting a lot of smart contracts. And also the limiting factor when you're thinking of smart contract adoption is the audit. So every smart contract fundamentally has to be audited on a yearly basis for the amount of assets there. And this has to be exactly how you go through a financial audit at the end of the year. These contracts the code fundamentally has to be audited by a authorized professional and ideally a recognized auditor in by the financial regulators in these different jurisdictions. So that's the fundamental level of smart contracts. And with the growing adoption of smart contracts, we're also seeing stable coins become rather popular, and stable coins are generally pegged 1-to-1 to the dollar or euro. An example of this is the USDC, USDT, and Euro C. They have become the fundamental sort of building blocks on US dollar transactions and euro transactions. Outside of the central bank decentralized currency that is currently in play, and that's CBDC, that we previously did a webinar with the Singapore Chamber. So, I mean, there's tons of varieties, and there's growing adoption in the market. And Tom, what is your take on stable coins coming into the market, stable coins in this trade flow, and what is your outlook on the supply chain process flow with stable coins coming into sort of this map of the trade finance process? This is the last question. Obviously, we're running out of time, and I just wanted to get your take on that as we leave.
Well, I mean, I've heard rumors that some physical commodity trades with Africa have already been settled and paid for using US stablecoin. I think it was USDT. TradeFlow Capital, we have actually issued bonds in Switzerland to investors in USDC. Why we could do that, again, regulation is there, it's regulated, anti-money laundering checks all done. And also some of the rating agencies, Moody's, S&P, I'm sure others have as well, but are setting up rating groups for digital assets. So we did the USDC stablecoin because that has a very high credit rating from S&P, for example. So again, that meets our investment criteria and also meets our regulatory criteria. And as soon as we receive that in Singapore, our custody agents were able to then switch that, or as they say, off-ramp it into US dollar cash, which we then use to invest in some physical deals for a small, medium-sized firm. So we did that first in December. We've done it again in February and March of this year, and expecting to do some more bonds this month in April. Because we're seeing investors like institutional investors, private banks as well, they're like gold. They hold a little bit of stable coin as well as part of their portfolio, but they all want yield. They want to get some interest and returns on that, and so we're able to offer that to them through our sort of blockchain e-notes on these regulated markets. So early days, but so far the indication is that there's a lot of interest there, both from raising capital, but also for even making international and cross-border payments as well. I think sometimes in Africa, it's quite challenging for some of the banks. We hear from some of our SMEs in parts of Africa that they wait a long time for their bank to obtain US dollar, hard currency cash. So that can sometimes add days, sometimes weeks, in terms of them being able to remit dollars outside of the country. So sometimes there's a hard currency issue. And so using stable coin enables them to be able to settle payments faster sometimes. So we're starting to see that happening. And I think also we're starting to see banks as a result look at offering custody, not just of fiat currencies, but also of the stable coin currencies as well. And I think I would expect that to happen in Africa, as it certainly brings in some efficiencies for cross-border payments.
Agreed, 100%. And that transition, as a final remark from my end, that transition being in Africa, and what we're noticing is that while financial regulation and exchange control exists in these numerous countries, the dollar liquidity or the dollar reserves in a lot of these African countries are very limited, making it I should say there's the premium of getting dollars into those countries, but also it's extremely hard to get your money out of those countries if you're not a big player. So SMEs do continuously struggle with that space. So USDT as well as USDC have been filling that gap. Particularly out of South Africa, we've seen a lot of corporates pay for transactions regarding technology, as there's a limitation for paying in USDT and receiving goods. They're not matching the balance of payments in the Reserve Bank. So clients or SMEs tend to avoid doing goods transfers in USDT out of South Africa, more service-based payments through USDT. But as just to wrap up, Tom, thank you. Really appreciate your insight on the digitization. And what we look forward to is more questions that'll be posed, and as people raise that with us at the Singapore Chamber, we'll be sure to pick your brain a bit and get back to a lot of our audience that are on this call today. Thank you, everyone that made time to join the call today. And should you have any questions, please reach out to us on at the Singapore Chamber, and be sure to follow Tom on LinkedIn. He speaks quite a lot around the trade finance flows, as well as myself. I talk a lot about blockchain and Web3, and we look forward to seeing you guys at the next webinar. Take care, everyone.